first and foremost, the Caribbean is really interesting, 13 odd countries, lots of money movement between those 13 countries, but a real need for better money movement between the 13 Caribbean countries. And that's one of the key drivers that we see in that region. We see the tier one, or what I call tier one central banks, the very large ones, taking their time, being very cautious around the technology, but also looking at policy and business and other factors, of course. Smaller central banks, smaller countries, they are looking to proceed with less of a build, more of a buy option, where you can buy something, configure it, and put it in fairly quickly. We've seen that in Nigeria, of course. There's a hell of a lot to consider when rolling out a CBDC, as you mentioned. There's technical, there's operational, there's policy, there's governance, there's so many different layers there.
The Bundesbank used to have a central bank digital currency for many years, and we used to have accounts for everybody on the Bundesbank balance sheet. We had a normal banking license. As an employee of Bundesbank, you still had an account directly with Bundesbank. One of the reasons it was shut down eventually was because the customer service was so poor that central banks feared, that Bundesbank feared a reputational risk for itself.
Central banks have the opportunity to benefit from innovation in the private sector. It's sort of a necessity that they take advantage of the advancements in the private sector. When you partner with the private sector, you're able to benefit from feature development, iterations, and advancements as they happen across the board. So I think that's an argument for, again, for these public-private partnerships.
A year ago, 2 years ago, perhaps when we were talking, universal CBDC was less prominent. There was much more discussion about wholesale CBDC, and much more focus on control and about central banks being conservative and wanting to really understand and manage the reputational risks. And that perhaps was in face of the initial step with respect to Libra. But I think we've come a long way in the sense that there's much more openness to discuss a universal CBDC, much more awareness of the different types of dynamics and modalities of CBDC and how they could benefit society in terms of, financial inclusion, efficiency, speed, et cetera.
The BIS has put forward the discussion of an intermediated versus a hybrid model, where you have payment service providers that can have larger or smaller balance sheets. I think that's going to be an interesting and relevant debate to see how bold are central banks in opening up their balance sheets to other sorts of participants, maybe small fintech startups that serve niche communities that banks for many years struggled to reach.
I think this early iteration of the e-Naira that you're seeing is just the start of the journey. You do need a BVN, a bank verification number, in order to sign up right now. But the Central Bank of Nigeria is moving more so toward a more open system that enables the unbanked and other payment service providers to integrate. Nigeria actually has quite an advanced payment system. And that's both from the perspective of the underlying networks, as well as payment service providers, a variety of payment service providers that service different areas of the economy and the financial system. And the Central Bank of Nigeria, I think, values that highly and wants to ensure that as the e-Naira evolves, it takes advantage of and enables those payment service providers to augment their feature set and augment their capabilities. If the central bank, in partnership with a private organization, is operating the CBDC network and then opening it up to licensed financial institutions and payment service providers to provide payment services to the general public and enterprises, then they will have the ability to compete in a free market as to what the value of those services are. So we expect to see competition that will drive fees down substantially lower than existing payment methods. Although, again, that's yet to be determined. It does seem, especially when you take into consideration the success that DeFi has had and crypto more broadly, that more open systems are more likely to succeed. And so this is where there are some, I would say, challenges for central banks to measure the importance of AML compliance and transaction monitoring and controls versus the undeniable success that more open systems have.
But DeFi is really interesting to see how that's evolving, and that's open. It's kind of very low barrier to entry. You don't know who's at the end of your transaction, but hey, that's okay. I'm willing to take the risk because, the gap is so big.
There are strong path dependencies in this. Once you put in place a closed loop system, a walled garden like Facebook, it's very hard to move to the model of the internet, which is open loop, where you have lots of participants that can compete with one another, that lower cost for consumers. I think it's a big decision up front. Do we want this as an open system or do we want this as a closed system? And there's advantages and disadvantages to both. A closed loop system is easier to manage in many regards. An open system ensures interoperability and facilitates heterogeneity, which is good for financial stability, which is good to serve different communities. It's important in the debate about stablecoins to realize what stablecoins are used for today, by and large, and that's to have a safe place when it's risk off, that is still on a crypto exchange, but it doesn't force you to incur the cost of withdrawing from the exchange. It's not easy to enact global regulation for stablecoins. I think nobody will object to a stablecoin being issued by a regulated financial institution, be it a bank or an asset manager. There's very specific use cases. They reach the right audience for this. I think where the problem comes in, if basically unregulated entities like Facebook start creating financial instruments, it shows you that people are willing to incur this risk just to get the functionality. If that's not a clear sign to central banks, I don't know what is. It means central banks need to react and need to provide something to satisfy customer demand. Otherwise, they risk losing their core mandate and losing monetary sovereignty.
I do believe that these things can coexist. I think we'll see a proliferation of them. The big question is, do we want every commercial bank to issue a stablecoin? And then do we want every other organization, be it a big tech or a corporate, to issue a stablecoin?
I do think a CBDC could coexist with various forms of stable and unstable coins in a digital ecosystem, frankly, that mirrors the current cash ecosystem, the traditional financial markets ecosystem, where you have cash, you have secured deposits, money market funds, and a whole range of non-bank finance. And I think we're starting to see that actually roll out in the digital sphere. And it has to do with pricing, with convenience, with privacy, in similar ways that you're seeing in the traditional markets in some sense. And we're seeing that diversification and differentiation now starting to play out in the digital realm. So I think central banks are going to find their way, and different central banks are going to take different decisions based on their needs and based on their ecosystem, what they want their full traditional and digital financial systems to be.
The Office of the Comptroller here in the US, providing some guidance around stablecoins. Federated banks in the US could now start to use stablecoins to settle obligations between them. So that was kind of interesting, certainly a positive tone saying, hey, we don't have a CBDC here in the US. Maybe it's a private sector initiative. Sometimes the lines do blur when you start looking at things like synthetic CBDCs, which arguably is like a regulated stable coin. So there is some blurring of the lines there.
This diversity is a benefit of a well-functioning financial system. The central bank wants the banking system to facilitate intermediation to the real economy. So they could easily step back in. If they get a lot of inflow of digital cash, they can easily intermediate that back to fund the banking system, particularly if they're supervising those banks. There are clearly mechanisms to do that. It may not be the current operational feature of many central banks, but there are clearly ways to do that. And equally, they could do that to the non-banking system too. So let's say the CBDC pulled a lot of money, if the US launched it and it pulled money out of the money market funds, the central bank could engage in reverse repo operations to refund these parts of the financial system in a very efficient way if they chose to do so.
You get the full value chain on the blockchain, including the settlement, the clearing, the trading, the custody. All of this can be done within the same infrastructure and on the same chain. So I think there's a big question for CSDs and other sort of legacy infrastructure providers, what their role is going to be in this new system, because new entrants are carving up the space. And so if everything is integrated on the same, within the same infrastructure, and you are sitting on the outside as a legacy infrastructure provider, I think it's going to be difficult to make that adjustment.
You see DA kind of shifting into the security side, capital markets pretty heavily. One of the key projects we've been working on is Project Jura. I'm sure you guys might have seen that project's collaboration between the French central bank, the Swiss central bank, and the BIS, looking at cross-border PVP and DVP. Of course, in Switzerland, you have the SDX, which is, arguably a synthetic CBDC, you might call it. They manage the money for Switzerland. And with their new FINMA license, they now are perfectly placed for security settlement. So that project is really exciting. That is, true kind of, it's been a year and a half kind of exploring that space. But security settlement arguably is one of the biggest kind of opportunities that we see with CBDC. And how will these things then interoperate? So interoperability, as you guys know, has been kind of the topic du jour this year and will undoubtedly continue next year. We see the MCBDC project as well as Project Dunbar from the BIS exploring the interoperability of multiple CBDCs. Will the central banks be able to do that? Well, they could be perfectly placed to do that if, in fact, the new infrastructure suggests that the central banks are moving money between themselves. And certainly there's some really interesting configurations that Dunbar is exploring around how that might work technically. And once you have that technical substrate in place, what services then might you overlay on top of these things? FX always comes up, like how will we manage FX? The easy answer is, hey, let's just use what we have today. We'll use an Oracle. The Oracle will gather the FX kind of from the traditional marketplace. But as the traditional marketplace gets used less and less, let's just say, and the new world starts to be used more, will those rates be different? And so there's new opportunities coming up.
So it's very hard to say if certain institutions will face their demise because of this. But it's a fair point in the extreme. I just think it's fascinating to think about CBDCs, even for international development and for the SDGs, and that there are ways to actually use CBDCs for sort of the cross-border transfer of value when development agencies or central banks on their behalf are sending CBDCs to deal with crises in low-income countries or countries that have floods or earthquakes, et cetera, and to use CBDCs in combination with other technologies such as smart contracts, particularly if the home country or the country that's receiving the money also has CBDCs, where they have mechanisms, maybe through the national account of a universal CBDC, where the individuals who have their money at the central bank, and you can target international development through cross-border payment to the local central bank or to these people directly in a very efficient and targeted way. There's a lot of opportunity that go even well beyond the central banking efficiency. We really think about the values of the country and of the central bank. So when you're thinking about privacy and G7 principles, it's really a concern if certain countries that are issuing CBDC and don't respect privacy issues around it, that can have spillover effects, particularly if that CBDC takes on an international realm.
I think the bigger one is privacy.
Of course, I think it's a practical consideration. And again, I think that the central banks need to recognize and study what has been a success in market to date from the private sector. And that's sort of where I typically harken back to what has caused crypto and DeFi to experience its surge in use that it has over the last decade, and what elements of that can be borrowed to inform the design of CBDCs, not just at the technical level, but also from an access, policy, and configuration perspectives. So yeah, it certainly is a consideration. There's a number of ways that we could see them being able to sort of increase usage out of the gate, and that would be migrating different payment streams onto a CBDC network and slowly testing these payment streams. And I guess incentivizing use as well. This is where it would be interesting to see interest rates applied to different tiers of wallets, different types of wallets. So I think there's a lot of levers. There are a lot of levers that can be pulled to make transacting on CBDC networks more desirable and more effective for particular use cases and stakeholders.
It boils down to, can you actually make a CBDC useful for people? Can they actually use it to pay with sort of instant settlement finality, with sort of this feeling of I pay and it's done. I don't have to wait 20 seconds or longer until this has happened. If you can achieve this sort of usability feature, you don't actually need to talk too much about should it be legal tender? Do we have to put a lot of regulation in place to ensure it is widely used? You should make it so attractive that merchants who at the moment pay 70% of the merchant service fees of the cost of cards is MSF is paid directly by the merchants. They have an immediate incentive to switch to a system with lower cost and with more functionality, where you can enable sort of through smart contracts new kinds of use cases that you don't have today. I think this is how you win people over from cash and other payment channels to a CBDC. And then you don't have to wield the heavy hand of the state with, do you accept taxes in CBDC or do you enforce it by law? You just have to use technologies that don't use heavy fossil fuels. And there are several DLT providers that have managed to do that with proof of stake. The energy consumption has gone down orders of magnitude.
Performance is a process. It's not something that you achieve from one day to the next. It's something that you go on a journey on, and you eventually get there by tweaking and refactoring and more infrastructure, changing the applications and so on. So for me, performance is just a runway. Give me a runway, give me kind of a target, and we'll get there. I think there's many different technologies today which have a much lower footprint. And the interesting question is, how much energy consumption are we burning on the current payment system today? And if you can look at that and then go, right, from there, now let's think about what we need to do for tomorrow. I think that would be a good exercise versus trying to compare, Bitcoin versus Ethereum versus other technologies. I think we should start with what are we doing today and how can we better it tomorrow?
A lot of what's being marketed by DeFi makes it sound like it's a digital version of traditional banking. I do not think that's the case. I think it is a digital version of market-based finance and gets very sophisticated and in some cases opaque and allows for a certain amount, in some cases, a lot of leverage. And it is or at least under-regulated. So I think the issue here is if you have CBDCs and bringing more people into the digital space, and then more comfortable with certain forms of stablecoin or algorithmic coins, and then they have more access and get more involved in DeFi, I think it is really calling out for scrutiny and regulation, not judging, but rather it needs to be within the regulatory perimeter, because right now with over $1 billion in crypto assets and 100+ billion in DeFi pushing up crypto asset prices, it's really pushing on the verge of a concern for financial resilience and possibly, in the not so medium term of financial stability. DeFi
will, in one form or another, play an important part as the backbone for the financial backbone of the digital economy. And I think it's important that central banks find a way to impose regulation. It's not enough to say, oh, you naughty little boys, we regulate you. You need to find a way to actually, when you pull on the lever, that something happens in the machine. And for that, I think CBDC is exactly the right way, where you can have some DeFi protocols and services moved into a well-regulated space. We as central banks approve risk models of banks already. There's certainly a model that can be adapted to approving DeFi projects.
DeFi today, really on one end of the spectrum, really unregulated. And then you have this notion of institutional DeFi, or regulated DeFi, a bit of an oxymoron, but two opposite ends of a scale. And I think there's a really good opportunity to allow these things to coexist. And the final thing I'll say is, the institutional DeFi space is very interesting to the private sector for the main reason of liquidity and liquidity savings. So how could you really unlock, a tremendous amount of liquidity that's locked within institutions, corporates, even individuals, right? And provide, again, a substrate that's a little bit safer than the unregulated space, right? So I think it's a tremendous opportunity.
What we've seen emerge from DeFi maybe is sort of acknowledging what Rob said, is that entities have been able to provide what are traditionally fairly expensive and inaccessible financial products in a distributed manner, in a permissionless manner, arguably. And so it's clear that there's demand for some of these more complex financial instruments, which are, again, traditionally only accessible to a small number of privileged financial stakeholders in the current system. So I find that very interesting. And if central banks via CBDCs can open up those similar opportunities at lower costs and make them more accessible, then we may see some demand for CBDC in a more regulated form of DeFi. I do think that central banks are looking at ways that a CBDC could enable them to implement a more efficient regulatory regime for regulating crypto trade. And it might involve having CBDCs as the required base trade pair for virtual asset service providers, having them, mandate that, okay, yes, you can run an exchange in a compliant fashion in a particular region or number of regions, and you need to use our CBDC for the base trade pairs so that we can monitor inflows and outflows. Like, I could see that happening.
The regulation allows for innovation, but it slows down areas of risk that could become systemic. But I do think that if you map out the system at a very high level and through financial stability councils can get the different supervisors and regulators together to try and calibrate the type of policy tools they need to put in place, and even forward guidance on regulation. I think you're seeing some very large regulators, including in the United States, providing communication. That communication itself is slowing down some risk. So I think the tools are available without undermining some of the benefits.
It's not a one and done forever. Those levers will change over time. And I think, as this evolves, having those right levers, I think, will give the central banks the opportunity to participate. Certainly, again, another question on the BOE, this notion of, the central bank operating system on the money, like how thin or how fat should that be in order to allow true openness and innovation to happen? So it's the jury's out. We don't know.